Workers' comp audits, the bookkeeping mistakes that doubled my client's premium. A client of mine just got hit with a $47,000 workers' compensation audit bill because of 3 simple bookkeeping mistakes. His annual premium went from $12,000 to $59,000 overnight. If you have employees and workers' comp insurance, you need to watch this entire video because what I'm about to share could save you tens of thousands of dollars. Hey everyone, I'm Bev, and I've been a bookkeeper for over 30 years. Workers' compensation audits are one of those business nightmares that most owners never see coming. They think workers' comp is just another insurance premium they pay, and they forget about it. But every year, your insurance company can audit your books, and if they find discrepancies, they can retroactively increase your premiums, sometimes doubling or tripling what you owe. Today, I'm sharing the most common bookkeeping mistakes that trigger these massive bills and exactly how to protect yourself. First, let me explain what a workers' comp audit actually is. When you buy workers' compensation insurance, you give them an estimate of your annual payroll and what types of work your employees do. You pay a deposit premium based on that estimate. But here's what most business owners don't realize. At the end of your policy year, the insurance company has the right to audit your actual payroll records and job classifications. If your actual payroll was higher than estimated, or if they reclassify your workers into higher risk categories, you owe the difference. And these audit bills can be massive. In my client's case, what started as a routine audit turned into a $47,000 surprise bill that nearly bankrupted his construction company. Let me tell you about Mark. He owns a small construction company with 8 employees. His workers' comp premium was $12,000 per year, which seemed reasonable. Mark thought everything was fine. He was paying his premiums on time, had no claims, and his business was growing. Then the audit notice came. The insurance company wanted to review his payroll records for the previous year. Mark figured it would be routine. Maybe they'd owe a few $100s if his payroll was slightly higher than what was estimated. 3 weeks later, he got a bill for $47,000 in additional premium. His new annual premium jumped to $59,000, nearly 5 times what he'd been paying. What happened? 3 critical bookkeeping mistakes that transferred his low-risk office workers into high-risk construction workers in the eyes of the insurance company. The worst part? These mistakes could have been easily avoided with proper bookkeeping. Mistake number 1 is misclassifying employee job duties. Mark's first mistake was how he classified his employees' job duties in his books. He had labeled everyone as general laborers or administrative staff without thinking about how workers' comp insurance actually works. Here's what you need to understand. Workers' comp rates are based on classification codes that reflect the actual risk of injury for different types of work. A desk worker might cost 50 cents per $100 of payroll to insure, while a roofer might cost $15 per $100 of payroll. In Mark's case, he had classified his project foreman as administrative because the guy spent a lot of time doing paperwork. But the auditor discovered this foreman was also climbing on job sites, supervising dangerous work, and occasionally doing hands-on construction tasks. That moved him from a 68-cent rate to a $12.45 rate. The lesson? Your bookkeeping must reflect what people actually do, not what their job title says. If someone spends even 20% of their time doing high-risk work, they typically get classified in the higher risk category. Mistake number 2 is poor record keeping of overtime and bonuses. Mark's second mistake was sloppy record keeping around overtime and bonuses. His bookkeeping showed regular salaries, but didn't properly track, categorize overtime hours and performance bonuses. During the audit, the insurance company discovered that Mark's actual payroll was 30% higher than what he'd reported as estimated payroll. Why? Because overtime and bonuses count towards your workers' comp premium calculation. But Mark hadn't included them in his original estimate. Here's what many business owners don't realize. Workers' comp premiums are calculated on all compensation, including regular salaries and wages, overtime pay, yes, even the time and a half portion, bonuses and commissions, holiday and vacation pay, the value of room and board if provided, even some fringe benefits. Mark's records were so disorganized that the auditor had to reconstruct the payroll from bank statements and tax returns. When they did, they found an additional $180,000 in payroll that should have been included in the premium calculation. At an average rate of $8 per $100 of payroll, that's an additional $14,400 in premium right there. Mistake number 3, independent contractor documentation. The third and most expensive mistake was around independent contractors. Mark regularly hired some subcontractors for specialized work, but his documentation was terrible. During the audit, the insurance company reviewed Mark's 1099s and found several problems. Some contractors didn't have proper business licenses. Some worked exclusively for Mark with no other clients. Some used Mark's tools and equipment. Some worked under direct supervision of Mark's employees. The auditor reclassified 3 of these independent contractors as employees, adding $150,000 to Mark's auditable payroll. These were high-risk workers too, classified as roofers and heavy equipment operators. The additional premium on this reclassification alone was $18,600. Critical point: if your contractors don't meet the strict independent contractor tests, the workers' comp auditor will treat them as employees and you'll owe premiums on their entire compensation, plus penalties for not having them properly insured. What are some other common bookkeeping mistakes? Well, beyond Mark's situation, here are some other bookkeeping mistakes I see that cause audit problems. Mixing personal and business expenses. If the owner's personal expenses run through business payroll, auditors will include that in premium calculations. I had a client who paid his personal mortgage through business payroll. The auditor counted that $24,000 as additional wages subject to premium. Poor job tracking for multi-class operations. If your employees do different types of work, you need to track what percentage of time they spend in each classification. A restaurant that also does catering might have employees who work as both low-risk food servers and higher-risk delivery drivers. Not tracking certificate holder requirements. Some clients require that you carry specific workers' comp coverage. If your certificates show higher coverage than what you actually have, you could face both audit issues and contract violations. Improper overtime calculations. Auditors don't just look at your overtime pay. They verify it matches your time records. Inconsistencies can trigger expanded audits of your entire payroll system. Here's what most business owners don't realize about workers' comp audit problems. It's not just about paying back the premium. There are hidden costs. Multi-year lookbacks. If they find problems in the current year, they might audit previous years too. Some carriers can go back 3 to 5 years. Higher future rates. Poor audit results can affect your experience modification rate, which impacts future premiums for years. Coverage gaps. If contractors get reclassified as employees, you might have uninsured workers on your job sites. That's a massive liability exposure. Loss of payment terms. Many carriers require immediate payment of audit bills, unlike regular premiums that might have payment plans. In Mark's case, the $47,000 bill was due in 30 days. He had to take out a business loan just to pay it. Here's how to protect yourself from workers' comp audit disasters. First, maintain detailed job classification records. Document exactly what each employee does and what percentage of time they spend on different activities. Update this quarterly, not just during your audits. Number 2, track all compensation. Your bookkeeping system should capture all forms of wages and bonuses, overtime hours and premium pay, vacation and holiday pay, and any fringe benefits that count as compensation. Number 3, bulletproof contractor documentation. For every contractor, maintain signed contracts clearly outlining independent contractor status, certificates of their own workers' comp insurance, business license copies, evidence they work for multiple clients, documentation that they use their own tools and equipment. Number 4, quarterly self-audits. Don't wait for the insurance company. Every quarter, review your payroll against your workers' comp classifications. Calculate what your actual premium should be and adjust your estimates. Number 5, separate payroll tracking by risk class. If employees do multiple types of work, track their time by classification. Use time tracking software or detailed timesheets that separate different activities. Number 6, keep pristine records. Maintain organized records of detailed payroll registers, time and attendance records, job assignment documentation, contractor agreements and certificates, and any changes in employee duties or classifications. If you get an audit, here's what to do. Before the auditor arrives, gather all payroll records for the audit period. Organize your contractor documentation. Review your policy to understand what classifications you're supposed to have. Calculate what you think you should owe based on actual payroll. During the audit, be professional, but don't volunteer any extra information. Answer questions directly and factually, and if you disagree with a classification, ask for specific policy language that supports their position. Take notes on everything discussed. Common audit red flags to avoid: inconsistent records between different reports, missing documentation for contractors, payroll that seems unusually low for your industry, employees whose job duties do not match their classifications. Make sure you know your rights. You can dispute classification decisions. You can request a re-audit if you find errors. You have appeal rights if you disagree with results. If you get a large audit bill like Mark did, first of all, don't panic. You usually have 30 to 90 days to respond and potentially appeal. Review everything. Go through the audit work papers line by line. Auditors make mistakes too. Check classifications. Verify that the job classifications they used are correct based on actual job duties. Verify your payroll calculations. Make sure they calculated overtime and bonuses correctly, and consider professional help. Insurance audits can be appealed, but you need someone who understands workers' comp regulations. Negotiate your payment terms. Many carriers will work with you on payment plans if you communicate early. In Mark's case, we were able to successfully appeal some of the classifications, and his bill was reduced to $31,000. Still painful, but $16,000 less than the original bill. The bottom line is workers' comp audits are not optional, and they're not going away. Every business with employees will eventually face one. But with proper bookkeeping and record keeping, you can turn what could be a business-ending disaster into just a routine administrative task. The small amount of extra effort you put into proper classification and documentation will save you thousands, or in Mark's case, tens of thousands of dollars down the road. If this video helped you understand workers' comp audits better, please hit that thumbs up button and subscribe for more small business protection content. Drop a comment below and let me know. Have you ever been through a workers' comp audit? What questions do you have about classification or record keeping? I read every comment and often turn them into future videos. And remember, proper bookkeeping isn't just about taxes. It's about protecting your business from expensive surprises like workers' comp audit bills. Thanks for watching, and I'll see you in the next video.